All right, well, the Obama administration is expected to launch a new program to help homeowners who owe more than their houses are worth. This is a huge problem in this country. This comes as rates for home loans are at the lowest levels in more than 50 years. So how can people take advantage of this? With me now is Mickey Cargile, founder and managing partner of WNB Private Client Service. Thank you very much for talking to us. You know, I know personally some people in Arizona who were hit really hard by the housing market, and they had to foreclose and they have no equity in their homes. This has happened to millions of us. Half of the 1.3 million borrowers that enrolled in this temporary loan modifications program have actually fallen out, though, because they didn't qualify. So how does this help, and how can you take full advantage of this?
Julie, it's just a new program, and it uses about $14 billion of the TARP money, so it doesn't require any new funding. And it's targeted toward people who are current on their mortgage, but upside down. In other words, they just owe more money on their house than the house is worth. Now, under the program, if the lender agrees, and the lender agrees to take that hit and reduce the mortgage to where it's an amount that's less than the value of the home, then the lender can offload that loan onto the taxpayers and get it off their books and reduce their default risk.
Okay, so a lot of critics are calling this redistribution and essentially the government having its way with taxpayers' money. Could this in the end bite us back?
Well, certainly, you know, the estimates are that still after modification of the loans, you know, once you go through this program, you'll have a lower interest rate and your principal will be reduced. But still, the estimates are that 1 in 5 will still default, so that's going to fall on the taxpayer if that occurs.
Okay, so if you qualify, if you could explain to me, let's say we own a home for $150,000, which is our mortgage, but the home is only valued at $70,000. What happens to your mortgage payment in that sort of scenario?
Well, the lender would have to write the mortgage down to an amount that's less than the market value of the house. So that would be your first benefit as a borrower, is you would get that write down. The trade-off is that's going to lower your credit score. Now, Julie, my fear is that if that happens, if you take this program, you'll then be locked into that house because you won't be able to qualify for a new mortgage. So if you take advantage of this program, you need to make sure, first of all, that your finances are such that you can stay in that house and continue to make the mortgage payments. And secondly, that you want to stay in that area. You know, one of the big problems we have is that we've really lied to the American consumer and made them buy houses that they can't afford. You know, we do have a part of the population that needs to migrate to where jobs are. And if you look at the areas that have the highest home ownership, they also have the highest unemployment, because people can no longer migrate to where the jobs are simply because they can't get out from under their homes.
Okay, now, you know, rather than see this as the Obama administration reducing mortgage balances for homeowners who own more than homes are worth, a lot of people on Twitter are writing about it. I put the story out there, and Texas Galt writes on Twitter to me that Obama administration is actually taking money from taxpayers to reduce mortgages and balances of the irresponsible. They say this puts taxpayers at risk, and it's another example of how the banks got us into this mess in the first place. Why would the banks then turn around and do us any favors and take a hit for us?
Right. And it's not really a favor. What they're doing is they're actually paying an insurance premium. That amount that they write down the loans by to reduce the loan to the market value of the home is actually an insurance payment that they can then eliminate the rest of the default risk from their portfolio. Now, that's the question. Will the lenders do this? You know, the mortgage services are overwhelmed right now with refinancings, and how quickly can they really get to a program like this? It's one of the major questions I have about the program.
All right, Mickey Cargile, thank you very much for talking to us. We appreciate it.
My pleasure. Thank you, Julie.
Great.